Hello there. Welcome to Financial Accounting 85. In this video, we want to look at a question from November 2023. And this is question 3 of that question paper. And this question is on branch accounts. So the question reads, the branch of Orchard Street Company keeps its own trade receivables ledger, and all cash collected were deposited directly to the head office bank account. Then inventory is supplied to the branch at selling price. The next paragraph from the information given below show the following ledger accounts of the branch in the books of the head office for the year ended 31 August 2021. So we've got the branch inventory account, branch adjustment account, branch bank account, inventory to branch account, branch profit or loss account. So these are the accounts that we have. So you'd see that on the first account, this is the branch inventory account. We are going to enter there the values of inventory at sale price. Very important to take note of that. And then on branch adjustments, we are going to enter in the value of markup. So remember, we have got a formula that we have which says a cost price plus selling price. Cost price plus markup. Let's just try to correct this. Cost price plus our markup will give us our selling price. So this is what we have. Then the representation in terms of percentages, our cost price will be 100, and then our markup will depends with what percentage you are given in the question. Then the total will give us the selling price. So this is what we have. So we are going to see that the inventory values that we are going to put in the branch inventory account and then the branch adjustment account will be in the proportionate values of the selling price and markup values. So we are going to see how we are going to calculate according to the question. In some questions, you'll be given the value of cost price and selling price, then you can calculate the figure for markup for the values to transfer to the branch adjustment account. So this is what we have. So we can go and see all information that we have in the question. We are also given a list of balances whereby we are having in the beginning balance on 1 September 2022. These are the balances in the beginning. So the balances that we are having here represents our balancing in the beginning. Then we put during the year the following transaction took place. Then we put other transactions that took place there. We put quite a big list there going down. Then on additional information, we are also given additional information that we have here that we need to follow as we answer the question. So this is what we have. Then on the other section, we have got our accounts already prepared accounts that we have there. We're going to start with branch inventory accounts, the other accounts that are going to follow. This is 3.1. So we are going to go to the opening balances that we are given in the question that we are going to put there. So the balance on 1 September 2020 are the opening balances that we have there. So basically what we are saying this is the opening balance. So this is what we have there. So what we are saying is we are given branch inventory selling price. So this is going to be the opening balance in the branch inventory account. And then remember we say in the branch inventory account, we are going to put the values of the selling price. So the selling price represents the opening balance in the branch inventory account. Then in the branch adjustment account, you're going to put the markup value like what we have earlier indicated. So the markup there, we are not given it, but we are given the cost price here. So remember, we're saying cost price plus markup will give us our selling price. So what it means, we have got our cost price, we are given it as 68,000 there. So we're going to say 68,000, then plus our markup, which we are not given, and then the selling price that we are given there is 102,000. Then we can always make the markup sum of the formula there and calculate the value of markup. We are going to say markup is equals to, we have got 120, we have got 102,000 on the other side. Then we are going to put 68,000 on the other side. It becomes a negative 68,000. So you're going to take 102,000 minus 68,000. Then if you calculate the two, the balance that you're going to get there, the answer is 34,000. So this represents the value that you are going to post to the branch adjustments account. So this opening balance for branch adjustment account, and then this one is the selling price, which is opening the branch inventory account. So we are going to enter that. Then for the cost price, we are not going to post it anywhere in the account that we are given, because at the cost price, we are going to calculate it as a balancing figure in the inventory to branch account. So we go to the other section and put our opening balances in the branch inventory account is our balance BT. Go to the debit side. We are saying here we've got balance BT, and we are saying the amount that we are having is 102,000. And then for the branch adjustment, we calculated it was 34,000. So we are going to say here our balance BT as our opening balance. So branch adjustment to come to the opposite side, which is credit side. That's why you're going to enter your balance BT. And then the answer that we got there was 34,000. So we're going to put our 34,000 here. Then we go back again to check other opening balances that were given in the question. So if you come here, you see that we also have a branch bank balance of 16,000 that we are given. So remember in the question, we also have a branch bank account. So we're going to put it as opening balance in the branch bank account, 16,000. So we go there and try to see where we have that account, which is on 3.3 here. So remember, this is an asset and it's just a normal debt balance. So we're coming here and saying balance BT as our opening balance for the bank account. And the amount that we have there, 16,000. So we're going to have to say 16,000. So we come back here. You see that we are now given the balance for during the year. We have got inventory from head office sent to branch at set price. So what does it mean? It means this inventory was sent from the head office to the branch. So the branch is receiving. So it means the branch inventory account is supposed to be debited as the receiver. And then we credit the head office inventory account. But in the question, we don't have the head office inventory account. So we're just going to ignore the credit part because head office inventory account is not part of the question. So we are going to the debit side and enter it. Remember, this is selling price. We said in the branch inventory, we put them at selling price. So this selling price that we are going to put on the debit side of the branch inventory account. And then we are also given believe that inventory from head office sent to branch at cost price 500,000. So we can now be able to calculate our markup. Remember, we said markup is equals to selling price minus cost price. So in this case, we have got our selling price 750,000. 750,000. Then we subtract our 500,000 as our costs. And then the answer that you are supposed to get there, it's supposed to be, let's try to see, get 250. So this is our markup that is going to the, this one is the figure that is going to the branch adjustment account. So in this case, it means the 750 is going to the debit side of the branch inventory account. Then the 250 of the markup going to the credit side now of the branch adjustment account. So we go there and enter those transactions. So we come here, we are saying on the debit side, we have got inventory to branch. Inventory to branch. So the double entry for this 750, we debit. Sorry, this is not the account. You can just go to the first account, which is the branch inventory account. You can find it there at the beginning of the question. Branch inventory account. We are saying the debit side. That's where we are going to put our inventory branch. We debit the branch inventory account with inventory to branch 750. So the double entry of this 750,000 is debit branch inventory account, and then you credit the inventory to branch account. Remember, you also have an account for inventory to branch account, so you're going to credit it with 750. So we go there and go to the account of inventory to branch account. So let's just try to see. So inventory to branch account is here. So we are saying we are crediting it here coming from the branch inventory. Branch inventory and the amount that we have is 750,000. So what we are saying is the account of the branch inventory account and then the inventory to branch. So basically what we are saying the account for branch inventory. Branch inventory account and the account for inventory to branch. These are two different accounts. So these accounts, we enter anything, any movement of inventory from head office to the branch. Whether the branch is receiving or the head office is receiving, we enter them in this account of inventory to branch account. So that's when we are going to enter it here. So you'll see that we also have a branch adjustment account. So this these two accounts that we have, that is branch inventory account and inventory to branch account, the double entry that will be having these two accounts will be at selling price. Will be at selling price, and then you would see also we have got the branch adjustment account, branch adjustments, branch adjustment account, the branch adjustment account, and then you also have inventory to branch. So you'd see that any movement of inventory that we have between the head office and the branch are supposed to be entered in these two double entries. Then we have got inventory to branch. So every double entry that is having these two accounts will be entering the accounts in the markup value. So every transaction that have goods that are moving from the branch to the head office or head office to the branch, we are going to have two double entries. First, we are supposed to post a double entry of the selling price, then you enter a double entry also of the markup. Then at the end of it now, the balancing figure now will be the cost price now. That's the cost price that we are going to transfer to the trading account. So that's what we are going to do there. It's supposed to be transferred to the head office at trading account after we have entered all the transactions. So here we've entered the selling price, whereby we debited the branch inventory account and credited inventory to branch account 750. Now we are looking for the markup, which is the second double entry for that transaction. So remember the markup, we calculated it there. Let's try to see the markup according to the question. We calculated here and we got 250. So we are going to credit now the branch adjustment account, and then we debit the inventory to branch account with 250,000. So we go there. We look for the branch adjustments. We are going to the credit side, and then we are saying inventory to branch. We are saying inventory to branch. And the entry that we have there is 250. And then we go to inventory to branch account, and then we debit now with 250. So remember the inventory to branch accounts, we find it here. So now we are saying we are now crediting the branch adjustment and debit the inventory to branch account with 250, which is now coming from the branch adjustment. Which is 250. 250,000. So this is what we have in terms of this entry. So we can just cross-check the entry that we have in the branch adjustment 250. Then we can now look for the next transaction that we are having, the next entry. We are now on branch cash sales 365,000 and branch credit sales of 520,000, which is obviously the credit sales is going to affect our branch trade receivables because it's not on cash. So what we are going to do here is whenever there are sales that are taking place, we are supposed to remove the inventory from the branch because the inventory is moving out of the branch. So remember, when inventory is we are receiving inventory for the branch, we debit the branch inventory account. Now inventory is going out through sales. We're supposed to credit the branch inventory account. So we're going to credit all the 365 and 520. So we go to the credit side of the branch inventory and remove those inventory that has been sold. So what we are saying, we come here, we say branch we're saying branch bank branch bank to head office the amount that we are having there is 365 for the ones that are on cash basis. And then also we have got those ones that are on credit. So since we are saying branch trade receivables, branch trade receivables, branch trade receivables. So the amount for that one, we have got 520. So we're saying 520,000. So I would say that the double entry of those two entries, this one is supposed to debit it to the branch trade receivables, and with the branch trade receivables, we don't debit it in the scope of the question. So we are not going to debit it because the question is not asking us for branch trade receivables. We can ignore the debiting part. Then this one is supposed to be debited to the bank account of the head office, of which we don't have the bank account of the head office. So we've got the branch bank account. That is what we have. So we are not going to end again with this part again. 365,520. We are only going to credit according to this question in the branch inventory account. Then I will leave it like that. Then we go to the next entry that we have. We have got inventory returned to head office by the branch at selling price. So remember, we said whenever there's a movement of inventory, either from head office to branch or branch to the head office, is that inventory is we are supposed to find out about the selling price. Then we make the double entry of affecting the branch inventory and the inventory to branch. Then we find out about the markup whereby we are going to create to enter again in the branch adjustment account and then the inventory to branch. So according to this one is inventory returned to head office, and it has a selling price of 15,000 and the cost price of 20,000. So we are supposed to calculate again the markup. Remember, markup we said selling price. If you come here, saying selling price on this part minus cost price. So our selling price here is 15,000. Then we subtract 10,000 as our cost price, and then we are going to get our 5,000. So this is our markup. This is our markup, which is going to, this one is going to affect the branch adjustment account in the inventory to branch account. So this one is being returned to head office. So it means it's a movement of inventory from the branch inventory to the head office. So it's going out. So we're going to credit the branch inventory account with 15,000. Then we debit the inventory to branch. Then with 5,000, now we do the opposite in the branch adjustment account. We're going to debit, and then we credit the inventory to branch. So basically, that's what we are going to do. So we come here. We do the first entry whereby we are crediting branch inventory account. Let's say inventory to branch, if selling price, which is now 15,000. Then the corresponding entry, we go to the inventory to branch account. I'll go to the inventory to branch account and debit it with 15,000. So we are here, we are saying branch inventory. Uh, 15,000. Then we've got the markup part, which is our 5,000. So that one is going to affect our branch adjustment. So we are going to, that 5,000, we are going to put it there and say, remember we are saying, we now go to the debit side and say, inventory to branch 5,000. Inventory to branch 5,000. Then you go to the inventory branch, you are going to credit it. Inventory to branch, credit it to 5,000. Inventory to branch is here, so we credit it here by saying branch adjustment. We have 5,000. So we have completed that one. We'll go to the next one to see what we have. So on the next one now, we've got a branch. This is the one that we're doing of branch at selling price and cost price. Now we are going to branch retains by trade receivables, 13,500. Branch retains by trade receivables. Branch retains by trade receivables 30,500. Remember, trade receivables, we said these are businesses or people that we sold goods to on credit. Now they are trading them. So it's not a movement between the head office or the branch, but it's a movement between the debtors and the branch. So it's not going to affect the branch inventory account and the inventory to branch. It's only going to affect the branch inventory account, whereby we are saying they are changed, they're coming back to the branch, so we're debiting the branch inventory account. And then corresponding entry, we are supposed to credit the trade receivables, of which you don't have trade receivables in the question. So we are not going to do the credit part. We're only going to debit with 13,500 in the branch inventory. So we come here, we are saying we go to the branch inventory. So we are going to the debit side and we are saying branch trade receivables. Branch trade receivables. And the amount there is 13,500. So this is what we have. And then what we are supposed to do next is that we are just supposed to ignore the credit part of crediting branch receivables, was not part of the question. So we can go back to check the next entry that we have there. So after that, we have got branch settlement discount granted 4,850. 4,850. So I remember branch settlement discount is when our trade receivables are paying, are making their payments. So we give we offer them a discount. So it's a discount allowed. Also, it comes as an expense, which is not going to affect our branches, but it's going to go to affect the profit or loss account as an expense. So we are going to go to the profit and loss account and debit it as 4,850. So I remember in the profit and loss account, we debit all expenses, then we credit all income. So this one is an expense now. We are going to the debit side of the profit and loss account and enter it as branch settlement discount granted. So we can go there and look for the branch profit or loss. So if you go down, try to see what we have on the. So we are saying we come to the branch profit or loss account here, and we are saying go to the debt side as an expense, and we say branch settlements discount granted. So what do we have in terms of amount? It was 4,850. So we can go back to check now the next entry. Right, we come here, we are saying after that, we've got branch credit losses, 4,100. So for credit losses, this is a bad debt. It means this trade receivables has been written off, so it becomes our credit loss. So it's an expense also which is supposed to be debited to the branch profit or loss account of 4,800. But before we enter that, let's go to adjustments and see if we have got any anything that's going to increase that figure or decrease, then we can go and enter it. So if you come here on additional information, we see that we have got item, the last item saying Mr. Met's account of 4,100 was written off as a credit loss, and this transaction is not been recorded. So it means it has not yet been recorded of 4,800. So we are saying what we are given in the list of balances, then we add the one that was not recorded to get the total. So basically we are saying 4,100, then we add another 4,100. But obviously, if you add the two, let's try to see. If you add 4,100 plus 4,100, we are going to get 8,200. So here we have got 8,200 that we are going to put on the debit side of the profit or loss. So we come here. So now we are saying here, there's 8,200. We are saying branch credit loss. $4,100 plus 4,100 is 8,200. So this is what we have on the debit side. Then we can go and check in terms of the next transaction. Right, on the next transaction, let's try to see. Right. From there, we have cash received from head office 49,720. So remember, this is coming from the head office bank account. So it means we are going to create the head office bank account, and then we debit the branch bank account because it's a transfer from the bank account of the head office to the account of the branch. So what it means is we are going to debit the branch bank account, then we credit a branch head office account, but we don't have branch head office account in the question that we are looking at right now. So we are going to ignore the credit part, then we debit only the branch bank account with 49,720. So we are going back there to look for that account, which is the branch bank account. So on the debit side of the bank, now we are saying we have our head office bank account. Head office bank, and then we put our amount, which is 49,720. Then we are only going to enter that entry. Then we go to check the next transaction. Right. After that, now we have got expenses are paid by the branch. So all these expenses, they've been paid. These are actual amounts that have been paid. So they're going to affect the branch bank account. So it's a payment, which means cash is moving out. So we are going to credit the branch bank account with all these transactions. Delivery expenses, 30,500. Rent paid, 18,200. Fuel and diesel, 6,000. Go to the credit side of the branch bank account and enter all those amounts. So we come here and we enter them on the credit side of the bank account. So it means we are coming here. So we are now saying on the credit side, we can start with rent paid, which is rent. The amount that we have there is 18,200. And also we have fuel and diesel. And the amount that we have is 6,000. And then we have delivery expenses. Delivering expenses, and the amount that we have 13,500. So those three accounts are the ones that we're creating in the branch bank account. So we can leave it as that. And then remember, we don't have the rent account, fuel and diesel account, delivery expense account that we're supposed to debit. So we are just going to ignore the debiting part. So we go there. We are now going to the expenses paid by head office on behalf of the branch. So these expenses were paid by the head office, but they belong to the branch, which means they are going to affect the profit or loss account. So it means we're going to include them in the profit or loss account. So what are we saying? We are saying we can go them one by one to see. So before we enter them in the profit or loss account, we are supposed to check if in additional information, if we've got anything that is affecting that amount. We've got delivered expenses, 13,500. Then we go to additional information to see if there's a prepayment on accrual in terms of this delivered expenses, which is 13,500. So you'd see that on delivered expenses, we don't have anything there. So we're going to put it as it is, delivering expenses, 13,500. So we are saying, I'll come here and we are saying delivered. Delivering expenses. And then we check the next entry. We have also rent paid, 18,200, but we check on additional information, we see that we've got something to do with rent, which is second from last point. Rent for September and October 2021 has already been paid. So what it means is that our year is ending on in end of August. So it means September also and October was paid, which means we've got extra 2 months that we are paid. So we are saying 12 months for the year, plus the extra 2 that we're having there, September and October, we are going to get 14 months. So it means the 18,200 that we are given is for 14 months. So we have to remove these 2 months so that we are left with only 4 for that year. So there's a prepayment that is there. So to calculate these 2 months, we have to find the monthly payment, then you multiply by 2 to get for the 2 months. So what we are saying is we've got 18,200, and then total months for the 18,200 is 14 months. We divide by 14. Let's try to calculate that one. 18,200. We divide by 14. So there, if you multiply by 2, you are going to get 2,600. So this 2,600 is representing the prepayment. So to get the actual rate for the period, you're now saying 18,200 minus 2,600. So we are going to summarize it as such on the answer section. So we come here, on the answer section, we are saying for the branch profit or loss for the rent. So here we are saying rent. We say in brackets 18,200 minus 2,600. And then the answer that we are supposed to get there for rent, we are going to get 15,600. So here we've got 15,600. Then we go back to check on the next transaction. So on the next transaction, let's go to the list of balances to check our next transaction. So if you come here, you'd see that after rent, we've got fuel and diesel. We've got fuel and diesel, which is 6,000. And then we check if you've got anything to do with the fuel and diesel there. In additional information, see that there's nothing. So you're going to enter it as 6,000. And then also we have, let's see, salaries and wages. We have 91,000. Then we check anything to do salaries and wages. We've got something here. Second point, in January 2021, the manager's wage of 2,000 rands was paid, but the municipal expenses account was recorded debited. So we were supposed to remove it from the municipal expenses, and then we put it in the salaries and wages of 2,000. So we are saying this 91,000 that we are having, we add this 2,000 that was supposed to be there, then we get that one. So we are going to enter this 6,000 fuel and diesel, and then the adjustment for salaries and wages. So we go there and go to the branch profit or loss. So on this one, so what we are saying here, we are saying what we have is our 6,000 for branch fuel and diesel. Which is our 6,000. And then after that, what we are supposed to do, we are supposed to enter the adjustment for salaries and wages. Remember, for salaries and wages, we are saying 91,000 plus 2,000. 91,000 plus 2,000. Obviously, you are going to get 93,000. Then we go and check at the next transaction. Right, after salaries and wages, we've got municipal expenses. So this 50,000, we are going to remove the 2,000 that was in municipal by mistake. So saying 15,000 minus 2,000. Then for insurance, we have 13,500. We check if you've got any adjustment. See that there's nothing for insurance. So we're going to put 13,500 as it is. 13,500 as it is in the branch profit or loss. So you're going to pick municipal expenses and insurance and going and adjust it there. So here we are saying under profit and loss, we have got municipal expenses. And then for municipal expenses, we are saying the figure that we have we are supposed to subtract 2,000, which is 15,000 minus 2,000. Then we are going to get 13,000. And then we also have the figure for, the last figure was for insurance. We say insurance. We are going to say insurance, and the figure is 13,500. So this is what we have for all the entries that we're supposed to put in the profit and loss. So we can now go account by account, trying to balance. Remember, this was the last item. This was the last item. We can just try to see from the opening, which is the first account that we have. Then we try to balance it. We go all the accounts that we have. So on 3.1, we have got the branch inventory account. So this is what we have in terms of the branch inventory account. This is what we have in terms of the branch inventory account. So remember, we are given, this is the opening balance. So the closing balance, we can go, we can check it again on additional information. I think we are given the information there. First point saying inventory sale price 19,500 and inventory at cost price 13,000 rands. This is on 3rd August 2021, which is the end of the year. So these are the closing balances. So the selling price is going to be our inventory closing balance for inventory in the branch inventory account. Then the cost price, you know that we are not posting any cost price in the account that we are having, but we are going to find the markup now. The markup will be the closing balance for branch adjustment account. So if you say 19,500, subtract 13,000, you will find that the figure that we have 6,500 is the answer. So this is going to be the closing balance in the branch adjustment. Then this one will go to this one, 19,500 to go to the closing balance in the branch inventory account. So we can just go and enter those accounts. With branch inventory accounts, balance CD obviously is going to come on the credit side as our closing balance, and we have got 19,500. Then we go again for the branch adjustments and put the closing balance there. We have calculated the markup, so this is going to be our closing balance. So it will come on the debit side. We come on the debit side as our balance CD. And the answer that we got there was balance CD. We got 6,500 as our markup. So it's going to be our closing balance. So this is what we have. So as you are balancing the account, you are supposed to start from the first account, which is the branch for inventory. Because the balancing figure that we are going to have in the branch inventory is supposed to be transferred to the branch adjustment account. So what you are supposed to do is you're supposed to add the debit and then you add the credit. You compare the totals. If they are not the same, the balancing figure, you're supposed to transfer it to the branch adjustment account. So according to the figures that you are having, you see that in this case, we have got a greater side on the credit, So we are going to put our double lines. So we put our double lines, and then the credit total there is 919,500. So it's going to appear both sides. And then this smaller total is on the debit, so that's where we are going to have the balancing figure. And the balancing figure there, since we have a CD there, it means the balancing figure is going to be a surplus. It's just we just call it a branch surplus. So if you say 990,500 minus 30,500 minus 750,000 minus 102,000, you get a balance here which is 54,000. So this 54,000, we are supposed to transfer it to the branch adjustment account. So you are debiting branch inventory and you are crediting branch adjustment. So you come here, you say this is coming from the branch inventory as a surplus. And this is a surplus. And the amount that we are having is 54,000. So you'd see that even though we have this, we have entered the branch surplus, still our branch adjustments are not equal in terms of debit and credit. If you add the total of debit and total of the credit, you see that the credit is greater, and the total of the credit is 338,000. Let's try to see. I will get 338,000. So if the greater total, it comes in between double lines, both sides. So we've got a smaller total on the debit side. So the balancing figure in the branch adjustment account, and no matter what side, you just transfer it to the branch profit or loss. So it's going to go to the branch profit or loss. So if you say 338,000 minus 6,500 minus 5,000, the answer that you are supposed to get there is 326,500. So this is what we have. And we do have a balance sheet there, which is on the debit. So we are supposed to put your BD on the opposite side below the double lines, which is 6,500. So this is what we have. Then we go to the next account to balance it. We now have the branch bank account. So on the branch bank account, we are just simply going to balance it. Let's put the double lines. We are not going to do some transfers there like what we're doing there. So what we are saying is, if you add the total of the debit and the total of the credit, you see that the credit is greater, which is 65,000. Let's try to see. Let's try to see. The debit is greater there with a total of 65,720. So 65,720 is the total of the debit, which is the greater total. So it's supposed to come in between the double lines at both sides. 65,720. Then here the balancing figure now is on the credit side. That's why we've got the smallest total. So it becomes our balance CD. Balance CD. So we are saying 65,720 minus 30,500 minus 6,000 minus 18,200. You get your balancing figure here, which is 28,020. So remember, we also have to put our BD on the opposite side below the double lines. So we come here, we are saying balance BD, and it's 28,020. Then what we are supposed to do, we go there on the next account. We have got let's try to see, our next account is there, 3.4. We have got the inventory to branch account. So on the inventory to branch account, remember, we don't have a BD or a CD. What we are going to do is any balancing figure that we are going to get there, we are supposed to transfer to the head office trading account. So we are just going to put our double lines. So you'd see that the credit there is greater total, which is 755,000. You come both sides in between the double lines. And then if you say now, you see now the debit has got a smaller total. So you say 755,000 minus 15,000 minus 250,000, you get your balancing figure there, which is 490,000. And this balancing figure, you are supposed to transfer it straight away to the head office trading account. Head office trading account, 490,000. So this is what we have in terms of our inventory to branch. Then we go to the last one, which is branch profit or loss. Remember, the branch profit or loss, we have got an amount that we are going to transfer from when we balanced our branch adjustments, we transferred 326,500, which we debited in the branch adjustment. So it's supposed to be credited here. So we can just maybe enter it here, which is branch adjustments. We put it here. Let's take note of the amount. You can just refer back to the branch adjustment and try to see that figure. We can, if you go to the credit side of the branch adjustments, it's there. So what we have there is we are now saying the amount that we calculated there was 326,500. So we now come here on the final part of balancing. We go down, put our double lines. So if you come here, you would say now, if you put our double lines, You can just put them here. So we leave space there so that we see which balancing figure we put it. Right. In this profit or loss, we are calculating a profit or loss. So the balance can be on the credit or debit. But if you look at our question, you see that the credit is greater. The 326,500 that we've entered from brand adjustment is greater than all the totals of the that we are going to get there for the debit side. So it means 326,500 will come in between the double lines, both sides. Then you say 326,500 minus all the total of all the items that are on the debit side, you get a balancing figure of 158,850. So this 158,850 is now supposed to be transferred. Let's try to see. It's now being transferred to the head office profit or loss. Remember, this is the branch profit or loss that we've prepared, and the balancing figure in the branch profit or loss is supposed to be transferred to the head office profit or loss. So this is the figure that we're talking about that is being transferred there. 158,850. So this marks the end of our question. Hopefully this video was helpful. Those who have subscribed, please subscribe and share. We are still coming with more videos as we prepare for exams. Let's stay tuned for the next video. As for this video, I'm signing out.